Hi, I'm Devin Shute. Welcome again to the Money Minute. So after a strong end to 2023, markets have been in a bit of a downtrend through the beginning of January. However, they have started moving higher again recently, and the US markets on Friday closed at a record high. First time they've done this in over 2 years. Now, this has been driven by solid economic data coming out of the US economy. Looking at the South African markets, we're still lagging a bit and about 10% below our record highs that we reached last year. However, there's a significant amount of bad news priced into the South African markets, and this means that it won't take much in the way of slightly less bad news to see our markets move higher. So, looking at the year ahead, it's likely that there are going to be two key drivers of investment returns. In the first half of the year, expect the focus to be on interest rates and the path of interest rates dictated by central banks. Investors there are going to try to determine when interest rates are going to be coming down. In the second half of the year, the focus could likely turn to elections, where billions of people around the world are going to be voting for their leaders. Now, this will bring uncertainty and in turn could introduce volatility into South African financial markets. So, given all these market movements, what should investors do? Thankfully, the advice is actually quite straightforward, and you guys probably already know this. It begins with building a financial plan for you and your family with a trusted financial advisor. Then you allocate to an appropriate investment solution, like one of the funds in the TRG Wealth Builder range, and this can be either a lump sum or a regular contribution. And then lastly, sit back and allow your capital to grow over the long term. The longer you remain invested, the less these short-term market events and volatility will matter to you, and the more your capital will grow. Thanks as always for watching. Have a great week.